What is up, gang? Nick here. Welcome to the show if you're new. Thanks for coming back if you're not. I hope you're all having a great weekend. In today's episode, we're going to be covering why BNGO beat the market on Friday and why it's trading up massively in after hours. I will also be discussing Senseonics Holdings and why it is also trading up. We have been tracking this one for a while now. This pullback looks very enticing. Can we push back through $10 in the coming days and weeks? Before we get it today, Webull is giving out 2 free stocks worth up to $1,850 for free. With this app, you can trade before and after hours markets. They are one of my favorite trading platforms. This offer ends soon, guys. You do not want to sleep on it. Check out our Patreon page. There's more content under the radar stocks, behind the scenes, and this also gives you exclusive access to our private Discord channels. This is where you can see all of my real-time trades. The chat is always popping off. What a cool community that is. And you know what? If you don't want that one, there is a free public channel as well. So check that out. Anyways, without further ado, let's get right into it. If you've watched my channel before, you will be well aware of Bionanogenomics trading on the NASDAQ under ticker symbol BNGO. I do have a degree in science, and I specifically scout out growth stocks within the biotech industry in their early years with massive future potential. I am really liking what I'm seeing here. With the broad cross-sector sell-off that has been occurring in the past few weeks, growth stocks were some of the hardest hit. Increasing interest rates, fear of inflation, and mass de-risking has turned investors away from growth stocks. However, the end of the sell-off might be in sight, and investors seem to be coming back to some familiar names. So a quick background on BNGO to get you up to speed in case you aren't aware. They are a biotech company looking for structural variations in genomes. This is useful for researchers and really specifically cancer research and cytogenomics, as their product Sapphire can scout out genetic diseases. They have also made pushes recently into the current health situation and are able to detect genetic drivers of severe RONI susceptibility. This type of technology is becoming increasingly relied upon, and I think this will only progress as our world dives further into genetic variations, genetic testing, and alteration. You know, we can see the writings on the wall with technologies such as CRISPR, something I've talked about extensively on this channel before, how companies like Intellia and CRSP will really benefit from the shift in our fundamental thinking. So what BNGO is doing specifically fits into my investment thesis. They are a company carving out an in-demand niche ahead of competitors and doing so better than competitors and cheaper than competitors. They have really obtained that exclusivity, in my opinion, and through innovative disruption, they are in a league of their own when it comes to digital cytogenetics. So BNGO recently pulled off from their 52-week highs and have fallen more than 50% in just the past few weeks. I picked up additional shares around the $6 range, and I really do think this play is going to 2x, if not more, in the next few months. And here's why I think this. We can see the momentum beginning to shift back again to growth stocks. We really saw this play out in the latter half of Friday's trading period. The sell-off is seemingly slowing, and buying appears to be ramping up once again. BNGO finished its trading period up 3.62% and is now sitting at $7.15. We can see that after hours trading, they are sitting at $7.66, up 51 cents, representing a whopping 7.13% gainer. Investors are jumping back into the stock ahead of their earnings date on March 9th. This is why we see the increased interest. They have an EPS consensus of a loss of 5 cents. Their previous quarter, they reported losses of 8 cents per share, so this would indeed be a movement in the right direction. They have indeed been seeing a lot of favorable earnings revisions lately. This typically indicates an earnings beat. However, we will need to see what happens on the 9th. I will have a video update as soon as I catch wind of anything. I do think they will beat earnings, and I think this could send shares back into the right direction. However, like I stated before, I do like this play long term. I'm strictly a long-term investor. I'm continually buying in. I think any valuation under $7 is a complete bargain long term and could easily 2x in my opinion. Alright, moving on, I want to also take a look at Senseonics Holdings, trading on the NYSE American under ticker symbol SENS. Like Bionano and virtually every other small cap growth stock, this one has been hard hit in the past few weeks. We just lost 7.81% on the last trading period, and we were actually down like 30% I think at one point in the day. I actually picked up additional shares on that dip. However, virtually all of Friday's losses were made back up in after hours. Continually climbing from their early morning lows, they're back up 7.26 after hours. So what's going on here? Why are investors jumping back into this stock? Well, Senseonics Holdings is a company manufacturing a product called Eversense. This is a small sensor that is inserted underneath the skin of patients with diabetes. This is a continuous glucose monitoring or CGM device that transmits data every 5 minutes or so to patients' phones, providing more data points and transparency into their glucose levels. I do think this company has taken glucose monitoring into the 21st century. I do think they have a great niche. Now, we ran up massively at the start of the year, pushing past 1000% gains in just a matter of weeks. This was due to the anticipation of potential FDA approval being granted to their Eversense device. If FDA approval is granted, there is no shed of a doubt that shares would absolutely skyrocket, and investors are positioning themselves for this potential eventuality. They missed their earnings consensus by 1 cent, posting a loss of 12 cents per share. This was why their shares were plummeting. However, like I said, we did see that correction. Now, their European revenue for the quarter was quite impressive. Through their Essentia Diabetes Care initiated Eversense sales, which was commenced on February 1st. They generated $3.5 million outside the US, however their domestic revenues are still quite weak at $0.4 million for the quarter. Remember, with the FDA approval, this could all change and change quickly, so like I said, I will be keeping a very close eye on this one. These two penny stocks are my two big plays this week. I will be keeping a very close eye on them. I think with these lower valuations after this massive consolidation, that these do represent much better entry points than we are seeing in the past few weeks. If you do want to keep track of my trades in real time, check out our Discord channel. You can gain access through our Patreon page where you can see more content behind the scenes and under the radar stocks. Don't forget about the Webull promo, 2 free stocks worth up to $1,850 for free. All you have to do is 1, sign up, 2, open an account, and 3, deposit in at least $100 using the link in my description. Anyways, everyone, I will see you all in the next video. Take care, happy trading, cheers.